Hi, I'm Sonia Kowal, President of Zevin Asset Management. I'm here with Marcela Pinilla, our Director of Sustainable Investing, to discuss what we mean when we say that we invest with a racial equity lens. Marcela, why do we do this? What does racial equity have to do with investing anyway?
It's important to start with acknowledging that chattel slavery, the practice of owning people, played a founding role in shaping this economy. Racial inequity is a systemic risk because we cannot divest it, we cannot diversify it away, like climate change.
How do we apply learnings about racial inequity to our investment process?
Statistical analysis often reveals that racial identity is a measurable, significant, and persistent predictor of labor market outcomes. Let's think about that for a moment. Why should racial identity, something as arbitrary and superficial as physical appearance, be statistically correlated with one's likelihood of being employed or how much they are paid for their labor? So our company research helps us to gain insights on company business models, their workplace governance, policies and practices, and how we work to advance or undermine racial equity through these policies and practices.
How do you look at public equities through a lens of racial equity? And what does it actually mean to do this in practice?
As we conduct research and ongoing due diligence of our portfolio companies, we build a clearer picture of a company, and that includes its impact on racial equity outcomes. So when looking at a potential company for investment, we focus on 5 key facets to identify areas of inequity and opportunities for improvement. The 5 facets are products and services, governance structure and oversight, workplace composition, policies and practices, and data disclosures.
That's a good big picture summary. Can you give us some examples so that people really understand how this works?
It's a long, protracted push to continue encouraging companies towards more inclusive policies and behaviors. As we are urging policy changes at the corporate level, we are also supporting national actions that protect the rights of workers and remove barriers to equity. Like, for example, asking our companies to disclose their spending on state-level lobbying that aims to curtail the rights of voters or suppress democratic processes, and using this knowledge of political influence and lobbying overlaid with a racial equity lens lifts up the intersectional impacts on people of color. It's injustice compounded by injustice that is reinforced by our institutions and systems.
And how about DEI, diversity, equity, and inclusion? Where does it fit in?
A couple of examples, and you can see more in our latest impact report. We have asked 2 tech companies, Apple and Alphabet, to tie executive compensation to their goals related to diversity, equity, and inclusion. And we've also engaged retailers, companies on their board participation in questionable organizations. Research shows that firms in the top quartiles for gender and racial and gender diversity are more likely to have above average financial return. This means that companies that fail to scan the market for underrepresented workers are at a disadvantage.
Thank you, Marcela. As a socially responsible investment firm, we feel that it's important to hold ourselves to the same standards and scrutiny that we use when analyzing companies for potential investment. And to this end, we take a very proactive stance to hire and retain a diverse workforce. Currently, half our staff identify as people of color, which is almost unheard of in an investment firm. We firmly believe that our diversity and inclusive culture gives us a unique perspective on global markets. And every 2 years, Zevin Asset Management gifts shares to all tenured staff, and not just to investment staff or senior staff, as is common practice at most investment firms. In these ways, we put our money where our mouth is. Thanks for listening and sharing.